Okay, welcome everyone. Welcome guys. Hope you guys are having a good Saturday morning. You guys just let me know if you can hear me okay. We'll give it just a minute or so and then we'll just start looking at charts. If you're new to these live streams, I don't do them every Saturday. Last Saturday I went camping with some friends, so I just couldn't make it, and then the Saturday before, I don't think there was a whole lot to really go through. But I usually try to tell you guys I'm going to do these at some point during the week. And what we do is we just go through stock charts. We cover your trade ideas, your charts you want me to look at, and I just give you my thoughts on what I see in those charts, and we typically find some good trade ideas for the next week. Usually there's at least something that really stands out as a good idea. So let me know in the comments if you can hear me. Okay, can everybody hear me? Let me know if you guys can hear me. Perfect. So I'm not exactly sure who heard me when I was doing the intro, but if you're new to the channel, we do these live streams. I try to do it every Saturday. Sometimes I don't feel like it, and then sometimes I've obviously have obligations and things to do. So these live streams are really about looking at the charts you guys want me to look at. I have the charts and trade ideas that I point out during the regular weekly videos, and I'm scanning for ideas throughout the week, looking for new ideas to go in those videos. And a lot of the time in those videos, I'm just following up on some of those ideas as well as pointing out the new ones that I'm seeing. But this live stream is really about your charts, what you guys want me to look at. So we'll go through some of those charts, and typically we find some really good trade ideas for the next week. And that's really what I'm looking for, is charts that have good setups that haven't necessarily triggered yet, but have the potential to trigger. And those usually end up in my watch list, and I talk about those throughout the week. So let's go ahead and get started. So if you guys want me to look at a stock, an indice, or if you just want my general thoughts on something, leave a comment. Let me know that what you want, and we'll just start at the top. And I'm going to go for about 45 minutes, and then we'll wrap up. Okay, so what Twitter and Snap. All right, we'll start out with some tech stocks. Twitter I don't look at too often. Just it's never been the best trader for me. But I do have it charted here. I think someone asked me to look at that in a comment throughout the week. That's what I got on Twitter. No negative divergence. You see here how when we made this high, we made a lower high and then kind of a lower high so far. This could go up higher, but that was definitely a lower high. And the momentum was also moving down right here. See the momentum moving down? So that's just downward price action, downward momentum. There's no divergence there. So usually divergence is what I'm looking for to signal. That's how you catch the one side of the trade off guard. All right. If price just starts moving down and the momentum's moving down, it's kind of expected. It's a little more expected, but spotting negative divergence tells you in advance that a trend's about to reverse. And when you can jump on that reversal point, break of trend line support, and you catch that moment where the trend really starts to break, That's where you have the highest probability of catching all the, whether it's long or a short trade, but catching the people who are on the other side of the trade off guard, and then they have to scramble to reposition, and in that scramble is your profit basically. And so typically that's where you start to get, you'll start locking in some profit. So I don't know on this one. I see there was an uptrend here. It broke. That's a pretty impulsive breakdown right there. And it's kind of back testing. So it could run up and back, do a full back test and a fill of the gap, a gap fill, run up, hit that, then roll over. No negative divergence. For me, I'd rather just look at a different chart, rather than take a shot at that one. Snap. So Snap's just doing this. All right, Snap basically, the bigger pattern, you always want to pay attention to the bigger pattern and then narrow it down to the smaller patterns. But the bigger pattern, here's your March 2020 lows, uptrend line right there. Big gap right here. So I think that gap's going to get filled, but I don't exactly know when. We put in negative divergence up here, so there's your divergent high, and we broke the trend line. Break, back test, breakdown, chopping sideways. I mean, in general, if you look, chopping sideways there since breaking. Now, that could be a continuation pattern. It's completely possible that this was a big flagpole, and then we're going to flag out kind of sideways and then continue, another huge percentage to the upside. It's possible. Right now, what I'm thinking is, what I'm looking for is a false breakdown. I'm looking for this price action here to fail and for us to head down there. If we do that, then this will be a false breakout, and we're likely going to go to the bottom of this channel and probably gap fill, I would expect. Until we do that, I'm not interested in this one. But the reason why I'm not interested in going long this either, even though it broke out and there could be this big continuation pattern, it has negative divergence, big negative divergence. The momentum has been failing, or fading basically. So because the momentum's been fading, I'm not really interested in just going long for this another huge rip higher because the momentum's not increasing. Now, if for some reason we get a big breakout in price to the upside and momentum just spikes higher and we go like that and burn through that negative divergence, that would be pretty bullish. And in that situation, you could get that full, a whole other leg higher. But as of right now, I don't see it. I'm not interested in going long something, taking a new long position when it has big negative divergence like this. All right, that's what I see, guys. Target on that one, if it was going to break down, you give it that false breakdown, would be that gap fill. And that's a ways down there. That's probably 50% drop. Yep. All right, moving on. And with precious metals, yeah, so precious metals. Well, I was buying precious metals last week, maybe stepping in a little early. We'll see. But the metals, here's gold, the metal. I like this area right here as, the thing is I had talked about gold in a lot of my videos, just telling you I was thinking we were going to get some more downside. And I was saying, 1800, 1790, somewhere right in there. And we overshot that. We're below, you're at 1760. But we could spring right back. But I was looking for some more downside in gold. And as far as I can tell, we have as far as I can tell, we're in a bull market. We're still in a bull market. So look, higher highs, higher lows. That really started back here in 2016. But this is gold bullion. And we're looking at a daily chart. Higher highs, we're trending up. You're not going to just go up in a straight line in a bull market. So, we ran up. Then we had this big correction right here. This was months-long correction. And that dropped about 20%, it looks like, in the price of gold. That's a good correction in a bull market, And we broke out to the upside. Clear impulsive breakout right there. But usually when you get these breakouts, you at least do a back test. And that's what this looks like. Breakout, back test. I'm thinking we hold support in this area. Now, we could dip just slightly below and maybe have a wick where it just intraday dips below and then recovers. That's completely possible. So watch for that kind of price action. If you see that kind of stuff where it's dipping below but then recovers, that's a clue. That's telling you that the buyers are here, and you want to be buying where the buyers were, where institutional buyers are buying at as well. So in general, I think we hold, and I think like something like that, probably going to grind kind of like that. Bull markets don't just shoot up. All right, bull markets grind higher. They what do they call? They climb the wall of worry. All right, that's what bull markets do. So a good healthy bull market is not going to just spike higher like an AMC stock or something. A good healthy bull market is going to grind higher day in and day out. You're going to see consistent gains, small gains, and then there'll be big gains along the way, but it's going to work its way higher over time. And then the miners look good to me. Like, look at HMY. I bought some of this right in the last minute on Friday. It basically 408 is what I was looking for, and it didn't hit that price till the last minute of the market open. It just ticked down, and I bought some right down there. So we'll see if that's the right area to buy. That was a good area to buy in the past. That was support. You can see we held support here, broke briefly. But this breakdown was a false breakdown because it had bullish divergence. Just like this is very similar to that snap stock that has broken out but has negative divergence. This broke down and had bullish divergence, and it was a false breakdown. And then boom, recovered, came down, hit that 408, held a support, and worked its way higher. Now usually when you see just a straight move down like this, once you run into a support level, you can expect a pretty good sharp bounce off of it. You don't typically just fall right through major support levels. So I'm thinking we bounce here. We could go down to the lower level, 378, which would also be this trend line right here, this downward trend line, and a back test of that. Boom, hit that 382 roughly, or depending on when we get there. Again, I'm looking for support in this area. It's a broad area, so the way I play it, I don't buy huge chunks all at once. I just kind of add as we start hitting these support levels. I add. If we go down a little lower, I'll add. We get down here, I'll add. But I won't add any lower. I'm not. This is the no bueno zone right here. I'm not going to add right down in there. And in fact, down there, I'd look at opportunities to probably exit the position. All right, this is just one miner. They all kind of have different setups. Some of them I think have to come off a little more, like sand just broke. Here's sand. Here's the uptrend line right there in sand on the daily chart. Didn't really have negative divergence though in sand. Let me zoom in on this. See if we actually could see anything in advance. Slight negative divergence, I guess. It's a small negative divergence, so I'm expecting a relatively small correction. Again, the way I'm treating this right now is it's a correction within a bull market. So I'm looking to buy at support. But sand could come off a little bit more. I could see, sand getting down. I don't know. Sand could get all the way down here to 596. That's possible. Again, down in these major support areas, to me, looks like the area you want to go long. So I'm adding to HMY. I'm starting to build a position in Barrett Gold. Barrett Gold could come off all the way down to 1581. There is the potential there. Here's the trend line off the major bull market trend line. Support right there. So if it wants to come all the way down, it could. I'm not exactly sure I want to ride that all the way down with taking a position here. That's another 20% down. But major buy zone right down there if you get it. So you'd be lucky to buy that down there if you could. All right, guys, moving on from gold. I'll probably put out a gold miner video that's talking specifically about the gold miners as I start to see more that look like good setups. For how much longer will tech and growth stocks go up after? All right, so here's what's happening, at least what I've been noticing. And this is what I'm looking for next week, all right? And there's a couple other YouTubers that I follow. Theo Trade is one of them. Now, Theo Trade, it's THEO Trade. He's more of an options person, and I don't trade options, but I do like to hear what he's pulling out of the options market, in terms of information. So I kind of listen I listen for signs and information from what he's seeing on that. And so there's this rotation, but the point is he was saying also there's this rotation going on. But the thing is that the financials and the industrials and the S&P 500 actually broke some trend lines on Friday. And here's the financials. All right, so here XLF, we broke support, right? I was talking about the financials and industrials weeks ago, or I don't know, a couple weeks ago. You'll see my thumbnail saying I think the short of the financials and industrials looks like the play right now as a sector. And so, there it is, boom, coming off, and we've got more to go. That was a really weak close. It's already down 8%. Now we hit a support level right there about 35.30. We closed below it. So it could just be a brief kind of close below it, and next week we gap, we open here and maybe have a little bounce, probably gap fill up to 36 or so. Completely possible. If next week we get a weak close, or a week open, like let's say Monday we gap down, we just continue selling, ooh, that's bad. And the financials have broke though, right? So we've got weakness and a breakdown in the uptrend in the financials. We've got weakness and a breakdown in the industrials right there. Okay, so that's those two combined. I don't know the exact weighting, but I think they're about the same weighting combined as the tech sector. So the tech sector is the heaviest weighted sector in the S&P 500, but these two combined kind of match it. So you've got breakdown in the industrials. The industrials look like this is closing right in the middle of the range, so I'm pretty sure we're heading down to 97.22 next. Probably get a bounce there. Let's look at the healthcare. So healthcare is even breaking XLV, and you can see bearish rising wedge, clean and clear bearish rising wedge. That's really obvious. Big negative divergence. Boom, boom, right there. So look at the close. It's been choppy recently. We broke, we recovered, we broke. So we need to see some more proof on this one that it's going to break. But I think we're going here. Just given the nature of the negative divergence, it's telling you that the momentum is just gone. This upward momentum is gone, and we're switching to the downside. If that goes, here's what I'm watching next week. Right here, QQQ. This is likely going to be probably my major play for next week. And I load up on these things when the time's right. Now, we've got a secondary trend line that we're creating on the hourly chart right here. All right, I'm waiting for a break of that. Big impulsive hourly breakdown. That's going to be my personal sell signal to short the Qs. And down we go, I believe. I think we're heading down to. I think we'll head all the way down to here to about 300, 304, depending on when we get there. Potentially a lot lower. Okay, so that's what I'm watching. And the major thing, uptrend line there. I don't want to get too much into this. I want to get back to your guys' picks. But again, if this breaks, the market's going down. It's just numbers, right? It's just math. The rest of the sectors have broken. If this breaks and you see kind of selling in the other sectors if there's no strength, if this sells off and they switch back over to the financials, fine, we might not break. But if you see selling in the financials and the industrials and selling in tech, down goes the market. We're likely having a 10-20% correction in the market. And again, you're going to hear a lot of the people talking about, on CNBC, after we've fallen 10-15%, or after we've fallen 10%, they'll start telling you, we're going, this is bad. They'll start talking bearish. How much lower can we go? They don't tell you in advance when the market's way up. They tell you after it's sold off why it's down. That doesn't do anybody any good. Here's why you lost money. So I don't watch that stuff. I just use the charts. Okay, guys, I got to move on. Citi. Yeah, Citi took a bath last week. Look at that. Wheelbarrow and shovel time right there. You've got clear, there's your trend line that I had marked out. Now, I played the financials. I used a couple other ones. I used, I was short Ally Bank and First, FITB, I shorted that guy. I shorted Bank of America. I didn't short Citi, but this was actually one of the weaker ones. And yeah, it's, you know, I don't know. I think there's some support. I think here's the support. This is probably the support right there. See that? Support. There's a gap, reject, or resistance. I think we're heading right down there. Now we'll probably bounce. I don't think we're going to just shoot straight down. Probably going to get a midway bounce and then go. I think there's lower prices in Citi. All right, guys. What else do you guys got? Nvidia. Yeah, I was looking at that one because that one's interesting, right? It was strong last week, and this is really interesting. This one had a reversal. This one I definitely am interested in next week. It had a reversal on Friday. If I go to the 1 minute chart, let me see if I can. I don't use the 1 minute on this platform. I use my trading platform. There it is. So this was your price action for Friday. Look at that. So bid it up, and is that right? Oh, sorry, I got that wrong. It's a 1 minute chart. I knew it looked like that, but let me delete that so I'm not confusing anybody. This is your price action for Friday. Okay, right there. In the morning, buyers just shot this thing straight up, and oh, it's so strong. And then they just sold the rest of the day, sold it down. And it actually closed, where did it close? Yeah, it closed basically lower than where it opened at. So big reversal. That's a reversal. And you know, that's the 1 minute, but if you look at the daily, it shows in the form of a doji. So there's your doji right there. Reversal candlestick. All right. I teach these concepts in my course. All right. I go through candlesticks. I go through trend lines and how to draw, how to correctly draw trend lines, how to spot divergences, and really just how to get your trade setups all queued up, and then how to actually trade them, or at least how I trade them, and how to manage risk. It's the easiest thing to take a trade. Everybody has an easy thing entering a trade, and a lot of people have a hard time knowing when to sell, knowing when to take losses. Those are skills that you guys got to learn if you haven't already, is when to take losses. Some people, once they get into the trade, they just cannot get out of that trade if they're going to lose money. They just lock into that trade. They can only exit a trade when it's profitable, and that's not really the best. That's not really the best thing, because you're not going to be accurate on every single trade idea, and nobody is. So when you realize that's why trend lines are so important. We got to know when we're wrong, and then just get out and move on. Find the ones that are going to work. This one here, big reversal candle. So what you want to look for is a follow-up candle. I think we're going to get it, but we'll see. Another sell-off candle, and potentially a break of this smaller trend line right here. That's falling about 724-ish. You draw that trend line out. Use log scaling. And yeah, that we could, if we break, I think we're likely coming straight down to here, which is about 588.52. Probably get a reaction at this former reaction high right in here. Get a little bounce or something. I think we'll break and go bounce and then break down. The only thing about this one, though, that isn't the best for a short, no negative divergence. You can see here that this has just been moving higher in price, and the momentum has been moving higher as well. No negative divergence on the daily chart. If you look at the hourly, see if I can zoom in. I think the hourly has negative divergence right here. There's the negative divergence on the hourly. It doesn't quite show up on the daily. So we do have negative divergence on the hourly, but not on the daily. Sometimes you just get it on the hourly. I don't know. But that's a big reversal candle, so look for follow through. I think we're going to break down. All right, moving on. Yeah, well, Micron is crumbling. Yep, well, there's, not necessarily a trade there if it already broke. You know, I looked at JD.com. I saw your comment there. Jerome Powell. That's funny. I didn't really see anything in this one. I see just, it looks more like a bullish chart to me. If I was going to, you know, I've got a longer term trend line right here on the daily. We have bullish, yeah, there was some bullish divergence showing up right here as it hit that trend line support. We got a bounce. So until it breaks this trend, I would say it just grinds higher. I don't see anything. But if you see a breakdown candle and it breaks trend, game over for that one. Or at least likely. Let's see. What else do you guys? DocuSign. I pulled that one off my watch list because it wasn't. Yeah, that one's likely. Oh, that's interesting. Let me take a look. Pretty kind of bullish there on the momentum. Let's see what we got going on. All right. So momentum's pointed straight up. If it turns, did we make a new high yet? Not quite. Little bit higher. So watch for what happens if or when it pops above this recent high at 283.64. If it pops above and then fails, and you get the momentum, what it'll look like at the time is this will go a little bit higher and then it'll fail. It'll start going down like that, and that will continue that negative divergence. All right. If it doesn't do that and you just keep going up, and then this is going to burn through that negative divergence and it's no longer going to be there. That's pretty bullish if that happens. So things to watch for. But if it pops and fails, again, it's all going to come down to triple Qs. If tech breaks next week and we get that breakdown, which I think we're going to get, these are going to go with it. Everybody's piling into these momentum tech stocks as a way for safety or whatever, but they're not going to be safe if you get the leaders, the FANG stocks selling off. So that's things to watch for. And again, you know, this one, even if it breaks down, you're just in this big sideways range. So you could short it down to the support. I'd probably cover down there, and then if it breaks that, you could re-short it. But again, I wouldn't short this thing until you see signs that it's going to break. And then build yourself a trend line, something for your sell signal. So if it breaks, I'd wait for an hourly close below a trend, some sort of a trend line like that. Not the best trend line, but it's all we got on the hourly. All right, moving on, guys. What do you guys got? Yeah, let's look at some new stuff. Yeah, maybe I bought your sell stop on HMY. Yeah, well, maybe. You know, that's the thing. I love to buy. I like to buy when stops are getting ran, and I like, you know, forced selling. You know, if your stop's firing off, that's a good spot to buy at. Not all the time, of course. But that's how the institutions do it. You know, the institutions, if they want to take large positions, they need to do it. They need liquidity to show up. So that's why usually in the morning is when they're making moves, because that's where it's the most liquid. Or if they can run stops and get all these stop orders that are kind of just waiting around, and they can see your stop orders. They pay the brokerage to see those stop orders. So then the algos say, okay, let's shoot it up into this stop order area. All these stop orders start firing, and as they're firing, they come in with their big buy order and buy up all those shares that are being sold through the stop execution. and that's how they can accumulate a big position without moving the price too much. If they just start buying into heavy buying volume, the price shoots up, they get a really bad allocation, they'll get fleeced. They want to be accumulating a big position without moving the price so that they take shares off the market, they've got their big position, and then as everyone else starts to buy, the price moves up and they sell into that strength. All right, guys, what is it? What's ASPS? What is that one? Okay. Pretty low price stock. I don't usually trade these ones too much. They don't chart that cleanly, but we'll do our best here. All right, so obviously in a downtrend. You know, there's your downtrend right there, I would say. So it's in a bear market. How far down is this thing from the highs? 85%. Well, sorry. It's actually, this thing is 100. This thing's lost a ton of value. So you had slight bullish divergence starting to show up. It showed up right there. This was a divergent low. It's now gone up. You know, it's kind of gone up a little bit. If I had to guess on this, I would never trade this one, to be honest. But if I had to guess, you know, you're likely going to run into some resistance. Yeah, and it looks like it is, but somewhere right in here. Looks like they've been popping it up close. So I would wait for a break of that. And if it breaks that, you're likely going to go all the way up here to 11.95. Otherwise, this is just a small rally. It's gonna get rejected and go lower. That's all I see in that one. Joe. What's Joe? Joe. St. Joe. Let's take a look. Big negative divergence. That's obvious right there. And it's just continuing. It's just extending. It goes like that, and it's just... We actually haven't had a new high, though. So this was your last divergent high right up in here. And we haven't had a new high. Potential head and shoulders. Head, shoulder, right there. And what I'd look for is a break of the neckline. Something like that. Usually the projected target for the break of a neckline is you take the top of the head, you go something like this, and it's like I'm log scaling, so these kind of stretch out, but yeah, something like that probably. And you can see there's some support. There was some kind of a consolidation right there, so you got some support right in there. So I'd probably, look for a break of that neckline for a drop down to there with a 20. It's a 21% drop. Again, my charts don't look like big moves because I use log scaling. If I turn that off, it looks bigger, but in general, it's still log scaling is the way to chart. All right, what else you guys got? I'm going to go for just a little bit longer, and then we're going to wrap up. Yeah, there was a rotation into tech, and I'm watching that thing like a hawk because if tech goes, I think we just hit a top in the market. Maybe not the all-time top but if the Fed is not going to, the Fed's starting to talk hawkish, although they're not doing anything. So they talk one thing and do another. Let's look at what they actually do. But maybe the Fed's just, the market kind of plays along with the Fed. So it's like if the Fed starts talking hawkish, the market's like, okay, we'll sell off and take. Professional traders don't care. Professional traders make money when the market goes down. In fact, they make more money and they make it faster. So if they have the Fed on their side, talking hawkish, that gives them the all clear to be bearish, basically, in short. Because you have to realize that, retail traders, 401k money, all that, they can't go short. When the market goes down, retail loses money just every single time, basically. But pros can make money when the market goes down. So that's, I don't know. We might have that all clear to go down. And I'm watching tech for that. That's going to give us our Q. Yeah, I don't care about that quad witching stuff. But yeah, I mean, we'll see. Riot blockchain. Yeah, let's look at that one. This one, I've tried to trade this. I've had some luck. It's a scary one to trade for me. It just moves so much that what you got to do on this, or at least what I do, is take your position size and just move it down. Let's say you normally take 10 grand on a position. then, maybe 2,500 or something for something like this, because it'll move 15% in a day, and it's not always in your favor. So if you can't ride out a 15% move against you, and that causes you to panic, you're too heavy in the position. That's a psychological lesson right there. Is just you got to have the right position size, so that as long as the chart doesn't break and the technicals still look good, like we still holding resistance, but even though it's moving against you, you can stay in it because you're like, well, there's no reason to get out technically. But if you're too heavy, you're just going to see those losses and you just can't take it. I know, because that is, you have to learn that kind of stuff. Riot resistance right there at 34.44. Rejected on Friday. I think Riot's going lower. Honestly, I think Bitcoin's going lower. But I would say Riot 1775. It looks like a level of support right down to there. So watch for that. But actually, before I leave, let's just check the divergences. See if there's anything going on there. Yeah, no, there's no divergence. See this? Bullish momentum. If I can get my line. Bullish momentum. Screw it. And bullish price action. All right, no divergence. So that all that tells me is we're in a downtrend, and this is a counter trend bounce, and then you continue the trend. All right. So I think we're going 1775 on that. And then for Riot, you always want to take a look at Bitcoin if you're going to trade Riot. Look, Bitcoin's just consolidating. We broke trend in Bitcoin. Here's your uptrend line in Bitcoin. Negative divergence. This was your divergent high. Okay, so when you're up here, you're looking for that break in trend. Boom, gap down. And this is where you wanted to short Bitcoin and Bitcoin proxies. And then down she went. So the little rallies that this thing throws off kind of sucks people in. Again, it's called what do they call it? The slope of hope, right? So if you're bullish on Bitcoin, these little rallies give you hope. Oh, I'm going to stay. It's coming back where this is the bottom. Nope, it's not. And by the time, it flushes out on you, now you've taken on so much losses or given back so much profit, you mentally just can't stand it, that this is kind of the second phase of how it goes. That at that moment, you're like, okay, I'm in this for the long run. This is what everybody says. It doesn't matter that it fell and I'm down, because I'm in it for the long run. And in the long run, it's going to make money. All right, so that's how that works. And then so they lock their feet in, they get locked into the trade. And then it goes down more and even more impulsive, and that's the panic phase. That's when everybody can't take it anymore. I'm going to lose my entire life savings or whatever is going through people's head. They capitulate, they flush out, and that's the bottom, typically. So, all right. So I think Bitcoin's going lower. Bitcoin 24.8. There's a gap right there. I think we're heading down there next. All right. What else you guys got? Yeah, Freeport. Yeah, Freeport's breaking down, right? Yeah, this is my Freeport guy here, KL. So yeah, Freeport is the inflation trade is coming off a little bit. It was way overdone. I don't think it's over though in the longer term, but it's got to correct, right? And that's a good thing if you want to trade the inflation trade, thinking that it's got more legs to go. Then you want entry points or places to add, and that's what we're getting. But Freeport is coming off. It's going lower. 30.30 is the next level of support. Below that, we've got 23.92, and then below that, about it's about 17.80 or so. I get that level, that 17.80. That's kind of your longer term. This was your longer term downtrend that it broke out of. So it's a clear breakout. It wasn't a downtrend. Clear breakout right here. But again, when you break out, we could come in and do a full back test. All right. So I wouldn't want to be long this thing right now, just because, it just broke, right? This is a massive uptrend, and we just broke. So we could come off a little bit. But watch those levels and see if we can hold. We'll look for bullish divergence at those levels, starting to show that that's the end of the downtrend. But the way I think it's going to go, it's likely going to go like this, Maybe bounce all the way to here. That's possible. Like that. Maybe bounce to there and like that over time. And then bottom out down here. We might not go that far. All right. I don't know if we're going to go that far. The farther down, that's a 50% drop. That's huge. I don't know if it'll get that far, to be honest, but that is possible. And the farther away a target, the lower the probability of hitting it. So look for bottoms, bullish divergences, here and down here. That's what I got on that one. Yeah, wheat, DBA. Well, commodities are coming off, and I don't own any commodities right now. I'm looking to buy some. I think we need to come off a little bit more. So which one did you say? Wheat? Wheat actually looks a little more bullish than the others. This thing didn't really have, well, it did. I take that back. You had negative divergence right up in here. But we got a trend line right there. This is your support. Could, I might be off just slightly on my trend line. Maybe it's down here. Something like that. We could just make that. So I think wheat's got to at least come off down to that trend line about 618 or so, or, hit that trend line. We'll see how that reacts. You get a break of the trend line, then we have a support level on wheat down here at about 597. I would think that's going to be about the bottom on that before it starts moving higher. Soybeans just broke trend right there. So again, bounce on Friday, but I think it's likely going to come down. And then what? DBA. That's the basket. Yeah. Let's see. I don't have this one really charted up as much. Yeah. Maybe something like that. So it hasn't broken trend yet. I still think it's an upward price channel. We have not broken trend. There was negative divergence up here. That's a divergent high. At least on the RSI it was. It wasn't so much on the PPO. So again, that's trend line support. Until you break that, it's in a bullish trend. All right, guys, let's see here. I'm just kind of scanning. I covered Riot and BTC already. Go back and watch, rewatch the video, but I just covered it maybe 5 minutes ago. STX, what is that? Seagate? Is that Seagate or what is that? Yeah, Seagate. Let's see. This is a semiconductor, right? Is that what they do? Or they do something. Storage. Memory storage. Yep. I like that one too. Look at that. Let's tighten it up. All right, trend line. Support, support, support. There's 3 reactions. We need at least 3. Up at the high, we had negative divergence on both momentum indicators. So there's your divergent high. See that? At the moment in time when stocks typically look the most bullish is oftentimes the most bearish, it's just sometimes gives you the best entry on the other side. So you can imagine people right here that were owning this stock, they thought off to the moon, because it basically shot up 25% in 3 days. All right. But in doing that, it created a divergent high, and that was the top. And it since has, broken trend. And it just broke, actually. It broke on Thursday, and then Friday just confirmation. So I would say we're going lower on this one. We've got some support. Looks like they're going to try to hold this level. Where is it? It's actually right about there. They're probably going to try to hold that level at 83.54. So look for maybe a little bounce. They could even back test. You get the back test, that's a beautiful area to short. All right, that's where I'd love to be able to short that thing at from my perspective. If you don't get the back test and you just break through, then you short on the break, the impulsive breakdown of the level. All right. Or you could have already shorted it on the break of this trend line. That's a good spot too. No, I wouldn't want to be long this. And looking at this, you know, you've got looks like we've got a level right about there. 71.84. And yeah, we'll just go with that for now. So again, from where that's at down to that one, that's a drop of what, 15% or so. So yeah, could be a lot more. You never know when we're going to just, you know, we're going into a bear market and these little levels we're just going to, you know, go down. We don't know. So I just try to point out the near term levels, and as we start to hit those levels, then you know, we can evaluate what the chart looks like at the time. Yeah, I talked about the NASDAQ. I talked about the triple Qs. I use the triple Qs as the NASDAQ proxy, but I'm watching for that to sell off next week. Doesn't mean it's going to happen, but if we do get that breakdown, then it's going to be bad. Thanks, Kale. Appreciate that super chat or whatever that is. Appreciate that. That always is encouraging. All right, DM, desktop metal. Yeah, I was kind of charting this thing, looking at it a little bit. Well, there's your divergent low. It actually kind of starts right about there. Bullish divergence down here. That's a divergent low. Oh, let me grab the other tool. Yeah, I couldn't quite make a good clean trend line on that one, I think. So, let's look at the hourly. I think if I had to choose a side, I'd want to be bullish. I'd want to be bullish on this thing. Again, if the Qs, though, drops, you know, this thing's likely going to go down with it. But it's already come off quite a bit. I mean, here's your highs, and it's already sold off 64%. So I don't have a huge opinion on that, but I'd want to be bullish. I'd lean bullish more. Looks to me like we're starting an uptrend in it, where you made a low, made a divergent low, broke trend, you're putting in a higher low, you're going to go higher, you know, whatever, wherever that ends, but something like that. Is Nucor? Is that Nucor? Yeah. Yeah, this one's a breakdown. This is the same as like Freeport McMoran. All those. I think they do iron or something. I looked at this. I had it charted. Clear breakdown. Where'd you short it at? 97.72. Let's see if you. Not a bad short. Not a bad entry. You know, because I can see your reasoning behind that. You can see on the 16th, it broke trend right here, but it wasn't that impulsive. It just kind of kept you guessing. But the following day, boom, I mean, it was just pretty impulsive. You could have shorted it any time the following day in that big move down. Day traded it maybe and just closed out a big chunk of that day trade and then just kept a swing trade position. That's probably how I would have done it, because when something's breaking down, you can load up. That's more day trading stuff. I don't really try to teach that, but you know, but yeah, that's a break. So I'm thinking on this one, you know, we have a gap here. I would say gap fill, gap entry. So there's your gap entry. Support zone down here around 75.29 and 72.90. There's a thin zone right here. See this thin zone where it just shot straight up? There's not a lot of trading. It's just thinly traded, price right up. Well, a lot of volume, though, but that's volume that they become sellers now. Anybody who's buying through here, as they start to go underwater, they start to exit their position. So bulk of sellers, I think that's what I'm thinking. So I like that one. That's good. And then and then also, just to confirm, see the negative divergence. So this is the stuff that shows up before the price breaks. This is why I talk about this in my course. Take the course, guys. If you haven't done so, you're going to learn a lot from the course. It's a good course, and it's cheap. It's $99. And see this negative divergence? This was showing up in advance, all right? So we knew that this was likely going to be close to the end of the bull run. Now, people that don't know how to read this stuff, all they see, really all they see is this. Oh, uptrend, They didn't see this downward. We're going to the moon. But, we knew on this channel, and if you guys follow me, that this was going to be a high probability that we're about to end this trend. And there it is. So, any kind of bounces on this, I'll probably short this thing. I'm not short this, but any kind of, if I can, if we're lucky enough to get any kind of bounce or back test like that, ooh, I'm all over it. And looking for a drop of, if I could get it up here, that would be a drop of 30%, the great risk reward. Because what's the reward on a shorting a back test would be 30%. And if you're wrong and they can recover the trend line, then if I can grab the right tool, then maybe you're wrong, 3% or so. So you'll lose 3%, 4% if you're wrong, and you'll gain 28, 30% if you're right. That's your risk reward. I teach that in the course too. Always have a favorable risk reward ratio on any trades you take. All right, guys, I'm going to do 2 more and then I'm done. Got to get on with my Saturday. So let me just scroll here for a second. See if I can find something that's kind of interesting. Well, Marcos Padron says CLF and WFC. Well, Wells Fargo is, has been a short for a little while, along with the other banks and the financials. So, I had everyone prepped for the financial short and the industrial short on this channel. I was prepping you guys. That's typically what I'm going to do. I'm going to see opportunities. I'm going to prep you in advance. And then once it takes place, we just trade those levels. We trade the levels and let it do its thing. But once the short's obvious, you don't want to just plow into. You don't want to just short something when everyone's like shorting. You want to short before everyone sees it. Shorting especially, you gotta be really quick on the shorting, because when shorting shows up, it plummets, and if you short late, you're gonna get taken to the cleaner. You gotta be Johnny on the spot when it comes to shorting, and that's why I point them out in advance. All right. Everybody wants to short when stocks are plummeting. Just like everyone wants to go long when stocks are going up, making all-time new highs. Why do you want to short? The stock's never going to fall. Well, all right. Yeah, MGM. Let's look at that one. I know I've covered that, but I think there's opportunity here that is still available. Like the opportunity has not, it's not, the train hasn't left the station yet. So this is, that's a good one to look at. Uptrend line right here on MGM. Negative divergence. This is really just a big negative divergence if you extend it out. This is all divergent high price action. And look at where we're at. We broke trend on Friday. Not impulsive, just barely down there. So I didn't short it. You could have taken maybe a starter short. That would have been one way to do it, is just take a stab at it with a smaller short position and then add to it. I didn't take it. But Monday, if we gap down, that's your signal, at least in my perspective. Excuse me. And first level support, 36.73. And I think we'll actually get down to about 31.83. And the potential to get all the way down to 23 2330, 2340, something like that. Those would be my 3 levels on that I'd really feel comfortable with right now. And, you know, potential drop of 40%. I like that. And it hasn't triggered yet. I mean, it just barely started to trigger. So looking for a gap down, and that's going to be just confirmation. And I'll be jumping on that one. Okay, guys, so that is a good one. One more. What do you guys got? Leave me a thumbs up. If you guys haven't done so, leave me a thumbs up. I got 61 likes. I got 126 people on the live stream. Let me at least get 100 likes, guys. Gave you an hour of my Saturday to go through charts and trade ideas. And I'm just scanning here for kind of the last one. What do I think the most promising short of them all? Well, what are we talking about? Sector wise, or just like any stock out of anything? I don't know. This is pretty promising. You know, I don't have the most promising. I just, what I do is when I see short trades, I just take, I kind of take a unit. I treat all my trades as like a unit trade. So I might throw, 10, 20 grand, whatever your size is on the short. And I'll just do that across multiple stocks that all have good setups. And then as they start working and as they start hitting profit levels, I start taking those trades off, locking in profit. But this one looks good to me. I don't know. I don't really have a most promising one. The financials look good. All right, MasterCard. I see that's kind of, CrowdStrike. I don't see anything in that one yet. I'll let you guys know if I see something. I looked at it last week. It didn't look that interesting. I mean, MasterCard's very similar to. Yeah, that's what I'm saying. MGM, it's not quite impulsive enough. It's a break of the trend, but the thing is, I could have my trend line just slightly off. Maybe it's like that. So that's why, to put any doubt behind the fact that your trend line, you want to see that impulsive breakdown. So that's what I'm looking for. But if it shows up on Monday, which I think it will, to be honest, but if it shows up on Monday, that's the signal. That's your trigger. And boom, we'll just rock it all the way down to here. Excuse me. And likely all the way down to there. All right, so yeah, Verizon's not going to be that interesting. That's just a big dividend player. It's just going to, Let's look at MasterCard, MA. I use Lightspeed Desktop Trader for my trading platform. So that's the desktop version, not the web version. You do need to have a margin. You need to have at least 25K for that platform, and then I think a margin account. But because you have to get above the pattern day trading rule, so you need at least 25K in a margin account. And you really got to have more than 25K, because any kind of losses, anytime you drop below 25K, they give you a pattern day trading call to where you have to get your account above 25K, or you can't trade, pretty much. But I use Lightspeed. That's what I use. It's fast execution. I can send my orders directly to the exchanges. It's more of a professional trading platform. And then I use this trading view for charting. All right, here's MasterCard. Yeah, this one is just like, doesn't want to give it up. But here on the daily chart, you can see here's your March 2020 lows, support. All right, so we've got a clear trend line. We have negative divergence on the RSI or on the PPO, and it's kind of flat divergence, but that is negative divergence. Anytime you make an equal high or lesser high with a higher price, that is negative divergence. So There's your divergent high. And we're looking for an impulsive break of this trend line. And look what they're doing. It's a battle. They don't want to give it up. But again, this will likely go if the tech sector goes and whatnot. So look for an impulsive breakdown. There's a level of support right here, 357.88. If you want to wait for the benefit of the doubt, wait for that to go. Impulsive break of that, and down she goes. Likely going down to 322.41. And, you know, potentially lower. It's not the best. The levels aren't that easy to spot on this one. So I was having a little bit of a hard time. So I don't have the best faith in my levels. But I think regardless, I think we'll break and head in this area. All right, so. Okay, guys, that's all I got. Leave me a thumbs up, and, you know, let's try to get at least over 100 on your way out. I do appreciate you guys following along. Take the course if you haven't done so. You know the deal. And I'll catch you guys next week, Monday morning. All right? Take care.